Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Got a bunch of announcements for you guys. Some very interesting things going on in Bookmap that you're going to want to suggest pay attention to. This stream is about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. The Trader Lab community is a group of like-minded traders that come together to leverage their collective experience. This is about the business of trading, understanding how the market works, why it does what it does, how to get in alignment with it, and to build the business side of this trading. Trading is a business, it's not a video game. And the thing about trading is the idea of a business plan is to only interact with the other participants when you have a statistical edge and not to gamble. Now, everybody pays the gamblers. Casinos pay the gamblers, but the casinos only play games that have an edge that favors them. And assuming they execute that edge, which they do, they never change anything. They use anchored inputs. In other words, they're not using variable inputs in a random environment. They use anchored inputs in a random environment. And most of us want to solve for certainty, and I can assure you there's no certainty in trading. There's only random distributions of outcome. But assuming you've done the work, you build out a plan, you only interact with the other participants when you have a statistical edge, just like the casinos. Assuming you can execute your plan, and you have to find what fits for you psychologically and statistically, you have the same opportunity as the casinos do to, over time, in a random distribution of outcomes, extract the dollars from the gamblers. That's the business of trading. Now, we can all imagine it's something else, that it squeeze out the risk, create certainty. Wrong business, wrong environment, in my opinion. Been there, done that, and probably so have you. And we all have random winners. It's not the point about the winners, it's the point of the edge. Everybody has winning hands in the casinos. The gamblers win. The casinos pay the gamblers, but over time, it is the gamblers who are supporting the casinos. By the way, there are 60 PDFs of structured trades that are available to everyone in the Bookmap Discord Trader Lab community. There's a link in the bottom of YouTube if you haven't taken advantage of this. Not only the community, which is a group of like-minded traders who've come together. It doesn't matter how long you've been trading, what you do, how you do it. What does matter is you're interested in the business of trading, and if you keep waking up in the same place, despite your efforts, just like the rest of us, we all have random winners, but if we don't have edge, we're not going to move the barge in the right direction and potentially not have sustainability. That's the problem, isn't it? So in the Trader Lab, there's not only 60 PDFs, there's the community, there's documents, a library of webinars, and much more. Now, I have some important announcements. Let's try to get through this. Calling all trading companions. There's a competition this month, and it's a chance to be featured in our trading calendar. Now, this is not one of those calendars that you hang up, like they used to do during World War II, and you've got your favorite pinup. Now, the thing is, some traders have sent in photos for our trading competitions, desktop competitions, and they had their pets there. We thought this is pretty interesting. I mean, we've seen some pretty interesting pets. Now, I don't know if the lizard sitting on your desk is really where you want to go with that. And I don't know how you get your goldfish to keep you company. But sometimes having a companion there is actually psychologically soothing. You never know what brings you comfort and peace. And if you have a pet, shoot us a photo of Bookmap in the background with your favorite companion who helps you trade, or even if you don't have Bookmap, shoot it in anyway. If you're interested, there's another link in the bottom of YouTube. You can download a digital version of Bookmap. It's free, and you can kind of play with it a little bit, and then take a photo of your pet, and you can win a full free month of Global Plus. And this is open to everybody. Use the link again in the bottom of YouTube. And not only for this, but we have another thing. Tomorrow, September 11th, at 1 p.m. Eastern Time or 12 noon Central Time, right after this stream, there's going to be a special event, and you can access this in the Bookmap Discord Trader Lab. Go to the, it's going to be on Zoom, by the way. So you go to the General Announcements channel. It's going to be an order flow event, and you might want to check this out. One more thing, and then we'll get into today. Thanks for your patience. Next week, I will be streaming on Discord only. So if you want to attend this stream and others, you do want to use the link in the bottom of YouTube and register for the event. In other words, join the Bookmap server. You won't be solicited, harassed, or otherwise abused. It does require that you verify your Discord username. It keeps the spam and the riffraff out. I'm sure you all can appreciate that. Now, what's going to happen is it'll be Discord only for my live stream. And then afterwards, the YouTube will be posted later for you to review later on. So, as they say, be advised. Now, we got a lot to talk about today. Grab your pen and paper. I'm going to try to rip through all of this and get to the real time as quickly as possible. This is yesterday's RTH. Now, if you remember from yesterday's stream, and you should always review these streams, they build on each other. I'm going to take you a little deeper than this. But yesterday, now I have a little thing, and this is anecdotal that I've observed over, 46 years of trading and abuse. Something I've observed many times. And I mentioned this, I think, yesterday in the stream, which of course I can't remember. But the market goes down. So we had the big selling day, right? Goes down, takes out the stops to go up. So actually, we're here, down to here, come back here. Clean out the stops under here. Then what? Yesterday, I was looking for longs. Well, part of the thrill, what do? The market goes down to go up. So I came in the morning yesterday. I was looking for longs. Okay, so my orientation is get long. And it turned out that, it kind of changed the boat around. So we started out with the shorts. But when we took out yesterday's low and we couldn't get any traction, then that set up the squeeze, and they become the buyers, and then off we go, and we close up here, what sets up today. Now, and I apologize for running so fast, I got to show you these things. Now, let's see if we can do this. This is that stop pick I was telling you about. There. Okay, so we got the stops. Thanks for playing, Tom. We'll send you a postcard from the edge. So now, see if I got this right. Yeah, 50 was down here. I chopped it off a little bit. You'll see what happens here. Now, this is the inside day. This is yesterday. So this is the inside day. And what we had on this day, when we did the Acapulco cliff dive, this is the previous all-time high. It left what's called a low volume zone. This is not auctioned. And this is important to understand because this stream's about understanding market mechanics, how the market works, why it does what it does, how you might get in alignment with it at times, and how you can also learn how the market works. And it's not a predictive process. What it is we can understand which side might get abused. So what do we know about this? On this day, the market, we did the Acapulco cliff dive. We have the low volume zone, and then we rotate down here. So this was a great day for Trader Lab participants, who have a vetted edge. So this is called mean reversion. Outside, rotate, rotate, rotate. Then this is poorly auctioned. And we have something called a single up here. On this day, the objective was to get long. 17 was a target right there coming up. Turns out it's missed it by a nick, and that was the high of the day. No clue. The next target was here. So yesterday, day before yesterday, it was longs or shorts. You can trade this from both sides. This is a reversion or balance market. The target was there for the longs, and then if we got through there, that's it. Say la guerre. Now let's follow. Now, yesterday, the lean was longs, but it turned out instead of the longs, it went down first, got the weak longs out under here. Stops are under previous day's low, I should say. Get them. and that was the low of the day. And what is it? It's an inventory grab. And then what do? We come back across the range, and what else? This is called a neutral day. And a neutral day, and we had one here too, so you know, that means both sides are active. But this was the flush of the week longs. And the fact we couldn't extend sets up return. And then where's the stops from the shorts that are in this day and the early sellers in here? They're above here, right there, there, and there. And then this would be the target, and then whatever it does, it does. And now we have, that's called single. That's when the market moves quickly. It leaves this behind. And now we have a single here around 26-ish, 26.5. Now remember this. Now I'm going to go to the ETH, and you're going to see some other stuff here I think you might find interesting, I hope. Let's look back. Now this is yesterday. I'm sorry. Yeah, yesterday, day before yesterday. What did we test? 79 in the ETH. This becomes an over-under. Now, yesterday, I hope I do have this right. The RTH low, now this is the ETH from yesterday. So we have to be conscious that it came here and this price is too low. Our low volume zone was in here, not full session, so it's not going to look the same as the other one. Too low, and now rotation. And we're looking for 25, don't forget. So 17, which is here, that was the first target, and then up here. Okay? So what happens yesterday? We come down, we get under the RTH low yesterday. I hope I got this right. Yeah, I do. And we hold this. This, for me, sets up longs. So it was longs, and then it turns out it's shorts to take the stops, and then longs back again, and off we go. And the 25 was the target, which I showed you. Now, this is today's ETH. What is this? A single. What's the low? The single. What does it tell us? Hasta la vista, see you later, going to the moon, Alice, maybe. Okay? Very fast, and apologies for the being speedy, but this is kind of what you do. Now, why would you want to do this? How about giving yourself a potential edge over other traders who don't understand how the market works? And everybody has winning trades. Let's take a look at how the market works. If you have questions, please post them. I'll do my best. Now, a couple of things. Grab your pen and paper. I'm going to give you some statistics. You got to do your thing, vet everything. Past performance is never indicative of future results. So what is the condition of the market? Well, the market's long. Okay. And what else do we know? The ETH high is here. The overnight volume point of control, fancy term for the highest volume from the last auction, which is the ETH, ETH mid, and 6542, the previous RTH all-time high. There's more. And we have yesterday's high. So we have the possibility to come here, which would be basically filling a gap, a price, a gap from the previous high, or down here. Either one. Pick one, knock yourself out. Now, so far so good, guys. So what are we doing? We were opening out of range in a gap. What does it mean? The market's out of balance. What might happen? Well, gap, go, or gap profit taking, which is called responsive selling. What is responsive selling? On a gap, if you're long from yesterday or whenever, or the ETH, what might you do? Might you respond to the gap higher and say, oh, it's a gift. I could buy a case of champagne. Let me do that. Respond, sell, profit taking. Now, what was too high? What is the retail price? It's here. So if the retail price is here, the ETH high is here, what am I going to do about this? I don't know. Let's see. So RTH open is here. Let's see what happens. Let's follow the yellow brick road. And if you have questions, please post them. I'll do my best. Well, thanks, Shada. Appreciate that. By the way, if you're in YouTube, there's going to be links posted to the special event tomorrow. Check it out. It's going to be on Zoom. Also, if you're interested in Trader Lab, there's a link in the bottom of YouTube. You can take advantage of that. There's no cost for it. And I'm not a vendor. I'm just like you. The only difference is I've done the same thing as you, but just did it longer. So, we cannot get confirmation and certainty. Wouldn't it be nice? Yes, it would be nice. So, RTH open. So I get my RTH open. This is 8:30 RTH, and now I'm going to show you some trades. Now, these are structured trades, and everybody takes stops. I took a stop today. I was very thrilled about it. And do you take stops? I take stops. How many of these influencers don't show you stops? Well, I take them. What the heck? I want to protect my account. This is not a business of being right. This is a business of risk management, trade management, and random distributions of outcomes. You may think it's something else. I'm going to suggest if you consider the random nature of the market, you're not responsible for being right or wrong. You are and this changes the psychology. In fact, we have a psychologist in Trader Lab, JJ Marks. We talk about things like this. We talk about our attachment to being right, our need to get approval. The market's not here to tell you you're smart. It doesn't take smarts to trade. It takes discipline and a vetted trade plan. When the largest bond traders in the world, maybe the largest, Tom Baldwin, who down at CBOT, largest bond trader in the world, he was a butcher before he came here. Now, I'm not saying anything against butchers. I'm just saying he wasn't a quant. He wasn't a physicist like the hedge funds hire. He's like you and me. Now, I'm not a butcher, but the fact of the matter is, it doesn't matter if you're an engineer or a rocket scientist. It is not about intelligence, if that's even a measure of it. So it's not about being smart. It's about vetting a statistical edge and then developing the discipline to manage your fear. Yeah. And if you're not fearful, you're not being honest, because we're wired to be fearful. So what is happening here? We get the RTH open, and this is now called a variable high volume node. I'm going to try to go as quickly as possible. By the way, I didn't give you the stats. And see, when I try to go fast. So we are opening higher outside of range. Write these down and vet them. 98% probability we take out the first hour's high or low. Which one? Clueless. 97-ish% probability to take out the ETH high or low. Nice. 81% probability to take out the ETH volume point of control. This is the highest volume from the ETH. And I always think of high volume like retail. Trading is shopping. If the price gets too low, you throw 3 in the cart. When you go to supermarket. If the price gets too high, you're going, I'm not going to pay that. Now, somebody pays it because they got to have a can of tuna for the casserole tonight. But basically, if a price gets too high, the participants or the shoppers, and let's assume we're shoppers here, won't pay it. So that's why volume dries up when the price goes too high. And when the price gets too low, the price dries up also because the sellers aren't willing to sell it there. And then when the buyers come for it, the sellers are going to pull their orders. And now the buyers have to pay up. So that's what creates our rotations in all time frames and fractals. So ETH high-low, 98%. Overnight volume point of control, 81%-ish. Overnight mid, 68%. Previous high or low, 67%-ish. Taking out the first hour's high, 62%. It goes down from there. That's all we need to know for now. And all these are available to you in Trader Lab, and you have to vet everything for yourself. But the Trader Lab community can help you because we've all been there, done that, right? So what do I know? 82% probability. What do I know? Responsive selling. Is everybody tracking? Dr. Ahmed, if you want to get 1 week free, I'm not sure if you're asking about Bookmap. If so, there's a free digital version. Go to bookmap.com. I want to rip through this because we have a number of trades. And I'm going to show you a stop I took today. You know, it's like that, oh, I'm so wounded. You know, no, I'm not. I go, huh, isn't that interesting? Is that what you think? Or you smash the desk and you're frustrated? I don't. That's never helped me. When my emotions, because as soon as my emotions take over, you know, anger, all this, then I'm subject to FOMO, revenge trading, and it lets the lunatic out of the cage, who I call Hyde. So this is the open, RTH open, and this yellow line is developing volume point of control. All it's doing is measuring volume. And think of this like shopping. So this starts at 0. Now here's the other piece. This one up here is from the ETH overnight volume point, but it's fixed. So now it's static. This is developing. So what does this tell me? This is very sensitive on the open. It says in a language of the market, this is language. I don't use any indicators. Language. So instead of letting an indicator be Google Translate, and it's very one-dimensional indicators. It doesn't take in the full picture. Your indicator does not know we're at a new all-time high. You know, you have to know about that. And maybe what does it mean? That's where most traders, I think, as they say, run afoul of trading because they've never learned how the market works. They're letting their indicators do the heavy lifting. And of course, other than the random winning trades we all have, how's that working out for you? And if it's working out, come to TraderLab. Show us how to do it. And it's not that you can't use indicators, but if you're not moving forward in the sense of creating sustainability in the business, then that could be problematic for you, assuming you want to create a career in this business. Too high, new retail price. I get a sweep. Now, here's a possibility. I get a sweep. It says counter rotation. I have two possibilities. This is too high. I'm not paying that. Shopping. I'm not paying that. Retail. Sweep. The sweep is into this resting liquidity. Buy icebergs. Counter rotation. This is what the sweep suggests, and the market doesn't have to do anything. So what might happen here? Well, I can go there. I can go there. But what happens if I go here and I can't get above the retail price? I'm not paying that. Boy, that tuna is expensive. Off we go. Responsive selling. So now, overnight mid, you wrote this down, I know, 68% probability, previous high, 67% probability, and we are focused on the first hour's high and the ETH high. ETH high, 79% probability. Huh. Look at that. So, two possibilities. Of course, many possibilities. So let's look. So this turns out to be our hold on, let me just make sure I got this right. Yep. The low, so that responsive selling sets up. So we come down, we get the sellers, and now I get VPOC migration. So this now is my new volume point of control. And when I was looking at this, I was going, do I want to get long? Do I want to get short? What am I doing? Well, I'm above the all-time high. That's interesting. I have the possibility to come down and fill this, as a gap. I also have the possibility to come down and get the yesterday's high, 67% probability. But I could also just come here because this is a breakout, right? So I got this for potential shorts, and it's like, good luck with that. All right. So now I know this is the last location that is too high. Why aren't we above it? Because it might be too high. So what to do? What are we going to do? Do we want to get long? Do we want to get short? Do we want to go, I don't know. What are we going to do? I don't know. Let's take a look. VPOC migration. VPOC migration. So right here, I'm looking at this and I'm going, well, if I come down in here, I'm going to be looking at a long. Okay? Just telling you. This is a variable high volume node. Now what's happening, the yellow line is showing me the retail price. This is just a way to look at this. And this is not a recommendation, and this is not mechanical. This takes an understanding of language. So if I don't use an indicator, I'm the indicator. An indicator translates price or a derivative. I'm doing the same thing, except I'm doing it based on order flow, liquidity, and the auction. So what I know is right here, this is too high, right there. So let's look at the microstructure. I'm not paying that. That's a little auction. Too high, too low, retail. If it's too high, I'm out of here. I'll send you a postcard. Next area, too high, too low, retail. Variable high volume node. I got to label that so I don't forget. All these become important if we come back the other way. Let's just stay with it. And I am trying to go quickly, so that might mess me up because this is hard to do without missing stuff. So I know at the moment this is too high. And I also know I gapped and I have responsive selling. I don't know what will happen. Part of the joy, because it's random. So I'm looking for a long variable high volume node. Right now, this is the lowest high volume area. And now this has shifted up. So far, let me just show you some behavior. I use high volume. I use the volume because it's shopping. So if you know how to shop, when you pay retail, it's high volume. But in our business, instead of like in your supermarket where the prices don't change, our prices are changing all the time. It's an active auction. So too high, too high, too high, too high. See the resistance? Break low, too high. Where's resistance? There. Too high. Where's support? There. Down here, no clue. Resistance. Break low. So resistance, too high. Retail price, either this or that. I know every time I say that, I know you guys, your head hits the desk. Going to zero, right? Interacting liquidity. I see these icebergs. I see this liquidity. I'm now using order flow. I cannot pick the low of anything. I know there's traders who say, I'm going to sell the high and buy the low. Come to Trader Lab shows how to do that. Never been able to do it. Right here, I get VPOC migration. So I have too high, too high, too high resistance, right? Right here, looking for this, get that. As soon as I cross over here and here, it suggests higher. So let's just watch the behavior. Let's watch. What's too low? Here and here. This is absorption. Why is it absorption, you're going to ask me? You see the selling delta? Those are the aggressors. And that's made up of sell stops and whoever else is in here. Icebergs take the other side. This is the limit order book, right? The passive side. So when you have a limit order, you're passive. Market orders are aggressors. That's what shows up as delta. So sellers and sell stops both appear the same. So I have delta. Now right here, I'm looking for what? South of the border. Why not? Except I get a buyer right here above my seller. Notice in this leg down, why didn't it go up here? Let's look. Sellers are here. Sellers are there. Break low. My sellers are here. This is resistance. Buyers are here. Why didn't it go up? Sellers are there. Passive. I don't know. Break low. What's here? Why didn't it go up? Sellers. There's your iceberg. Break low. Rotate up. What's sitting here? Sellers. Sellers. Too high. Break low. Sellers. Clueless. break low. Buyers, break low. Sellers are there. Break low. Sellers are here, going to zero. Buyers above. This is the potential first indication of potential change. Buyers above. Where were the sellers? There. Right here, the antenna goes up, and this is my resistance. Okay? Notice the behavior. Too high, break. Too high, break. Sellers, break. Too high, shift down. This is what has to happen. Stay under here, break under here to go south. It does the opposite. Break high. Now let's watch. VWAP, mid. Where's my buyers? Weren't they here? Not a trade, just a curiosity. What do I get here? VPOC migration. Now, I get under here, right here, no clue. What happened here? Sellers. What is that? The VWAP. What do mechanical retail traders do? Sell the VWAP. Are they going to get paid? I don't know. What do you think? No clue. Not my job. So I'm looking at this, and I'm looking at a long, but I don't have a location there. So I'm kind of sitting here and, I'm going, what's going on? So, but I know I got my buyers here. So right here, I'm going to show you a little idea. Just an idea. It's not a recommendation. This is all about market mechanics and structure. That didn't work out so good. Let's see if we can grab this. Try this again. Sorry about that. So what I do, and I do this for myself because I'll forget. I forget everything because I'm in the moment. So are you. So this is what I know. I know right here I got my buyers, and I know here I'm above, and my resistance is out in here. I know there's going to potentially be mechanical VWAP sellers, and they might be right. Maybe we're going to come here. All right, lovely. I don't know. Do you? Don't know. So this right here is where it changes. I put a little line in here, and let me just show you what it looks like. The volume in this I call it a microstructure. And really what I'm doing is I'm breaking this down as best I can. And, there's no, lovely solution, right? Notice what happens here. I come across, and this is my absorption. When I get above here, this is my resistance, but this is now my support. I get VPOC migration, suggesting this might be too low. So let's look at the structure. We come back. Where were my buyers? Where did the sellers get pushed out? Wasn't it here? And where was my liquidity? Wasn't it here? See, the liquidity is still in the book. Where's my volume? Isn't it there? So the way this might work, and this is not a long for me, I'm just showing you the structure. If this is too low, and this stays in the book, I'm seeing my icebergs are executing here. I now have this as my retail price in this micro structure. It becomes support. When I come down, there's my sellers. Remember what was there? My sellers. Why doesn't it go down? Because I'm coming back into liquidity, and these buyers are looking at this just like I am, going, oh, it's a bargain. Support. Support. See? Now, again, me sitting here with the jaw on the floor. So I'm looking at this, and I did not take a long. And, hindsight says, yeah, you should have taken a long. Ever hear the shoulda in your head? Yeah, you shoulda. Very clear in hindsight. So what do I know? I'm going to tell you a couple of things. One is, if I got long, and this is a bit advanced right here. I'm going to tell you about it. I didn't take it. But this is your support. This is fractals. Now I'm going up in, or time frame as you think of it. This is my retail price, and it's the lowest one. I'm going to throw a little line in here so you can kind of see this. It's right there. When I pull back to it and I get a sweep, this could be a long. Here, your stop could go out there. If that works for you, that's wonderful. And the scale would be here. And the target would be there. And what's the probability of getting there? Almost 81% probability. You have to bet that for yourself. So if you took it, I didn't take it. Doesn't matter what I do. I don't have the gift of picking lows and highs. It's not in my thing. This sets up a short. And it's a mean reversion short, and it's an aggressive trade. We're at new all-time highs. This is a Trader Lab trade. It doesn't mean you should take it if it's not vetted. It's a little more advanced. And the reason that let's look at the language of the market. This yellow line is the developing volume, and it shifts around. This is a sweep. The sweep suggests, and remember, I'm not going to say says, I'm going to say suggests that this is setting right here. If this is a sweep and I hold support right there, and I hold support right there, I can take a long here. Now I have to be conscious versus unconscious that the mid is here, and I can get mid sellers. So what did I get? VWAP sellers, sweep, squeeze the VWAPers out, and then mid sellers. If I take a long, I have to consider retail trader behavior. Doesn't mean they don't get paid. Remember, the gamblers get paid. But if I'm understand how the market works, I'm not being mechanical. I'm using their behavior, because if they're right, they sell the mid, I get taken out. Lovely. If I understand my trigger, I need the scale here because of that. Okay? And there's the sellers here. There's the absorption. Now, the question becomes, what's above here? If I get retail sellers here, and remember, everybody gets paid, doesn't matter. Everybody has winning trade. You could do it with a dartboard. Buy stops are here. So if these guys don't get love, then what's above here? Buy stops. What about the sellers in here? Buy stops. Where's my target above? Here. Where's my opening swing high? There. Here's a question for this astute group of traders. What's at the opening swing high? The sellers in this leg have their buy stops above the opening swing high. Does that make sense? How we doing in YouTube? Everybody conscious? Please give a like. Hope you find this useful. This is the Trader Lab. There's a link in the bottom of YouTube if you find this interesting and you're interested in the business of trading. It's not a video game. If you want entertainment, go to the casino. I always say go to casino. Get the cocktails and the ticket to the buffet. That's entertainment. This, business. So what do we know? Opening swing high. What's at the opening swing high? The sellers in this leg, right? So this is a long, and again, doesn't matter what I do. And this is the target. Why? Almost 82% probability. And the opening swing. See how you might put these pieces together. There's your target. Now, what happens here? Well, trade management. Let me show you. So if you took a long, you'd be risk neutral. Remember, you got a scale, and then here, and then there's another one. Let me give you the next statistic. Here. And this is also the ETH new all-time high and the ETH high. Wonderful. What's the probability of getting there? 79% probability. Past performance not indicative of future results. I'm going for that. And the way these things tend to work is it's random. So I come back, I get the opening swing high, I get my next target, and now going north. Okay? Now, here, What is this? Now, right here, I have no clue. So what I'm looking at here is the volume up here. I see my selling icebergs, and I have no clue. So what I know is, as I'm going up, my buyers are here, my sellers are there. So my buyers are here, my buyers are here, my buyers are here, my buyers are here. See, my buyers are there. So when I get the counter rotation, they're being absorbed. I break high. Micro high volume structure is there. So I start looking at these. Now I'm just drawing these in here so you can see them. This is support. It's right there, actually. Break high. This is support. Why? Sellers. If the buyers take over the sellers, thanks for playing. You get a coupon to the buffet, buyers. So going up, having a great time. Buyers are here. High volume is there. Break high. Buyers are there. Going to the moon, Alice. Sellers get below the buyers. The buyers are there. Now I got a seller. Now I got a seller. Notice the change. I mean, where do you see these sellers? Well, you got somebody showed up over there. Thank you. We'll take the gift. Up, 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 up. Buyers, buyers. Selling icebergs. Change. Okay? Change. Now, and again, it could just pull out and continue. No reason to think it wouldn't unless it doesn't, right? So, sellers. So this is my last area of support here. I get below it. Now, right here, I come back and it becomes resistance. So for me, if I can't get above here, out. So that was it. So I was out. Now, other traders in Trader Lab took shorts. Now, for me, VPOC migration. What do we need to do here, Tom? It's that or break low. And if this is too high, then hasta la vista again, and down we're going to go. Okay? I took a long somewhere around here, and I took a stop to figure out where it was. Oh, okay. Notice the resistance. Where do we come back? Where was it too high? That's why I draw these lines. What is this? That's a micro high volume structure. It is like a volume point of control, but it's in a shorter time frame as you think of time frames. There's no time, by the way. I don't use time because the clock doesn't regulate buyers and sellers. They're not waiting. Let me look at my watch. Oh, I got 5 minutes, 2 minutes. No, it's just what happens. My buyers are here. Why isn't the market going up? Because there's passive sellers here. They're being absorbed. That's what it means. Why didn't it go down over here? Because they're being absorbed. See the icebergs. So sell stops come out here. Why isn't it going down? Icebergs are right there. Don't know. Buyers get above the sellers, and that gives me this. Where's the other side? The sellers, the last place the buyers were in control is there. When I break below it and I can't regain it, that's where the exit was for me. This turns it around the other way. So right here, you could be doing a couple of things. You could be selling this if you're trading in this time frame, or nothing. Let's see what it does. This was really, really strange. This whole thing. So let's look. Where do we come? Back here. So I'm sitting in this and I'm going, what the heck? I'm just telling you, that's what I'm thinking. I'm going, wait. I took a long somewhere. I don't remember where it was. Yeah, it was after this. So once I got over this, this is my over-under, this overnight volume point of control. This is my outside edge. This is called a low volume node. What this really says is, right now, out here is too low. This is a low volume node. I'm just going to throw this in here. Now, what this says in the language of the market, and this is where I took my stops. I want you to see why. And other than how I, quote, feel about it, which has nothing to do with trading, that's just the lunatic, who doesn't want to lose and is looking for certainty and feels personally wounded and not intelligent, all the things you feel, I feel. Yes. I ignore it because it doesn't apply here. Our emotions are always triggered, has nothing to do with what we do here. This is important. This is important. And this suggests a possibility here. Now, when I see this is the buy sweep. The buy sweep suggests counter rotation. So when I see this, I'm looking for the counter rotation, and I'm looking over here because this area in here is where I'm looking for a long for a continuation trade towards the ETH high. So right here, no clue. Just the way it is. C'est la guerre, life in the fast lane. So let's look. So this is going to be a stop for me, okay? But I want you to see why. And doesn't matter that it's a stop, it's just it is what it is. So this is where I'm waiting for the trade. So I'm just sitting here and I'm going, well, looks like we got through this, which was our retail price from the ETH. We blew out a lot of longs on this move down, and we found our buyers. Now I come back here. This is my area of support. I've got this resting liquidity here, and if it shows up again in this outside area, I'm going to take a long, and my scale is going to be there. And the way this might work is, and it's called mean reversion. Underline the term mean. If this comes outside, I can buy it, and this becomes my obstacle. Let's look at the language. This is this is the retail price in this auction. So as most of the volume at the moment is down here, but when you leave it, it says maybe it's too low, and then we start a new auction up here. And then the high volume that's sitting in here, which is up here, is like that volume point of control. So if I get long out here, I'm going to look for coming back there to scale, and then I'm going for the ETH high. Also at 9:30 Central Time, my time, there's over 90% probability I take out either the first hour's high or low. That's all I know. So this is why I'm taking a long. So let's look. Whoop, wrong location. Hold on. Yeah, sorry, wrong location. It was here. Right here, I took a long, okay? And I took a stop. It came to my location. It had everything except, what did it not have? Buyers. So this was my long here against this, looking out here, this outside edge to come to there. Trade failed, I took a stop. Now, once this was the long, took the stop, pulled back to the bottom side, went short, flip right there. Watch. Then I'm going for this. And at 9:30 Central Time, I have something, that IB stat. Well, I didn't get the IB high. Thanks for playing, Tom. So now I'm turning the barge around and I'm going for the IB low and fill this. Get to the all-time high. Now there's two possibilities. The all-time high is a breakout of this. And 38.5 is another high volume area. Not going to spend time explaining all of this because I don't have it, but you can get this in TraderLab. So 38 and change, right? So this was my target, and to take out the opening swing low, which was here. So the reason, remember, we're looking for the opening swing high, which we took, and we're looking for the opening swing low. So who knows, right? And as far as I know, because I know I don't know, is we could have never looked back, right? So once I come under here, then wherever, trade's done. Now we have another trade in Trader Lab. Called the IBF. Now this gets a little funky, but it's a structured trade in Trader Lab, and it's a mean reversion trade. What is the trend? Up, down? What is it? Go figure. I don't know. So what I do is I just take the trades. That's all I can do. I don't know anything else. So I just follow the yellow brick road. So, however, what I know is now maybe I've got this done. I tested inside, I came out. So this sets up something called I called the IB failure. I came up with this thing many years ago. I didn't know what to call it. So, but the IB, there's a couple ways you use the IB. You can use it for continuation trades, but the trend is up. So if I think that all I did was pick out the week longs, remember how the market works. Market goes up to go down, market goes down to go up, market goes up to go down. So this is called the IBF. And the way this works is if we come across, we can revert here. It's a mean reversion trade. So the idea of this trade is when it comes across. Now right here, we test outside variable high volume node, two possibilities. You could take a short here, but for me, that would be counter trend. I already got my stops. I always think about fuel. The term is fuel. And what is fuel? It's the traders on the other side of the rotations. So if I'm trading, if I get short, I'm looking for the swings. And then if, for example, if I know there's stops here because of the swing, and if I take a long, wherever it is, I'm looking to come back here. That's kind of the way I operate. Just me. And I know there's stops here. Why? Retail trader behavior. So here I have absorption and I come back. Sellers are here. There's the icebergs. I come down. And this sets up a long when we come back here. Now, here's the other thing. Let's assume you bought it here. This is your location. Sellers are there. Buyers are here. Let's put our high volume node right here. Chop, 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 chop. Break high. Now, let's look at this. I want to show you this. So this is the trigger. So this is the trigger, break high, test. This is a long. Your stop must go under here. Now, you can also put it, if you want to be mechanical about this, 3 ticks under. And you would probably get stopped out here, I suspect. 1 second. If you did get stopped out, happens to me all the time. You break high. This is another trigger. What happened is we got stop picked. Happens. This 109 stops are the stops under here. Does anybody not take a stop? I take them all day. Another trigger. Support now is here. Same trade. Take a stop. You take a stop. Another long. This is the target. And then you're looking to come back across the range up out here. This jumps into the book. Look at the reaction. So this is too high right here. You see where it is? So I have this resistance. I have that. I have that. So I have these levels to observe. So if I get long, this is my scale. And then I have to clear these other levels. And you can see where it is. It's there and there because it was too high. Let me put this back in here. You can see it. What happens here? Sellers are here. This comes in the book. Now, often what you're going to see is when you get liquidity like this in the book, what's going to happen is it skews the book. Now, do these guys want to trade, or is this somebody like throwing a wall up that everybody can see? My outside edge is up here. This was my trade. I was only going try to get here. You know, so risk neutral up here, and then going for this. And the idea is now just trading this. And we can come out the top, we can come out the bottom, we can do anything. That part, no clue. Let's watch. Break low. This is a trigger. Now let's talk trade management. Where does the trade fail? Well, it's going to fail under here. So you have to have a trade management process. This right here suggests lower. When you see this and you can't get back above where, see, the buyers were here, the sellers are there. Don't forget this. This is a big deal. This is like a hand pushing the market down. Everybody sees it. Well, if everybody knows there's a big seller sitting out here, which may have no intention of trading, most likely, then it's a skew. So then when that happens, you see the response, hasta la vista. Get the buy, this sweep, hasta la vista, out of the trade. Thanks for playing. We'll see you later. Now, park. And possibility now to continue down to yesterday's high, which has approximately a 67% probability, not a recommendation. We can also just stay and rotate. So that's it. Not a lot of trades. You don't need a lot of trades. How many trades do you need? How about the ones that have an edge? I find, at least for me, I'm not looking for a lot of trades. Okay, we got to watch this. The IB low, the first hour's low, is right here. So this is an important level. The fact we couldn't get back here or up here, this is still here, suggests the potential now to come here. It's not a trade recommendation. If you don't have a trade, sit back, relax. You guys have questions. Thanks for your patience. Please give a like if you're visiting in YouTube. Always nice to be liked. Hope you're getting something from this. This is Trader Lab. Apologies for being like a speed reader, but I have a lot to discuss here, and I don't have a lot of time. The Trader Lab community is a group of like-minded traders who come together. You can get a lot of support in the Trader Lab, and it's really, the Trader Lab's a full-time community. There's no cost for it. Please give a like if you're in YouTube. And remember, starting next week, live stream, this stream will be in Discord only, and then it'll be posted after the fact in YouTube, so you can watch it later in the day. But if you want to watch this in real time with the narration of what's happening right now, you would want to use the link in the bottom of YouTube to visit the Bookmap Discord server. Also, there's a special event taking place tomorrow, in case you missed it and you were snoozing. This is something you might want to take advantage of. Couple things. There's going to be a special presentation at 1 p.m. Eastern Time, 12 noon, right after my stream ends tomorrow. It's going to be Get an Edge with Order Flow, and it's going to be with Trade Year. This is something interesting to register for the event. It's going to be a Zoom event. You need to go to bookmap.com, use the link down there to Discord, and just go to the announcements area, and you'll find a way to get in there. It's an order flow event. It's pretty cool. Go to general announcements. You might find that interesting. It's a special event. The other thing is, if you haven't taken advantage of this, get your lizard out, shot of your lizard with Bookmap or your workstation. You can win, and if for the month, you can win a free month of Global Plus. Free is good. So if you want to try Global Plus, you can get your hands on it. If you don't have Bookmap, you could use the link in the bottom of YouTube. Go to bookmap.com. You can download a free version. There, looking for this. Not a recommendation. What did we find out here? Sellers are here. You see this. When you have order flow, you're not going to see this unless you understand, and then you want to see the behavior. This is a trigger, and it has alignment. Now, the long target was this. When this comes here, it changes everything. Now, do we know what it's going to do? No. What do we know over here, by the way? The buyers. The buyers. What's under this swing? Sell stops. What's above here? Buy stops. There's buy sellers. So the buyers in here, remember what the market does. Market goes up somewhere to go down, and it goes down to go up. So this is support. We have to watch, okay? Not a recommendation. If we get under here, then the next target is this. That's it. Questions? Hope you're getting something out of this. This is the Trader Lab. How are we doing in YouTube? RP, it might be. I really can't tell you. I just followed the yellow brick road. What has the market done? What did it try to do? What did it not do? It did not get to the ETH high. We're now back below this. The market appears to me to go south of the border. It's not a recommendation. It can hold right here and then come back here. So, but this right here is trouble. This is more trouble. And this suggests out the bottom. And it's not a recommendation because I don't know, what I know is where the trades might show up. That's what this profile does for us. And I know why. I don't know when or if. So that's what I know. So if I operate in this environment of randomness, then I have to wait for locations. That's why this is a long, this is a scale. This is called mean reversion. And then the idea was to come back here. See, this is the outside edge. The fact this front ran it and I get a sell trigger is trouble. When I rotate back, I get the buy sweep. Trouble. This sets up a short. That's a short. So when I look at this, and let me draw a little box around this. I just want you to see what you can do. And again, what I do, I'm not saying it's a good idea. I'm just saying it works for me. And other traders in Trader Lab have taken this methodology and these concepts. And the idea is not, there is no plug and play. Wouldn't it be nice? The buyers are there. There's the absorption. The sellers are there. Who knows? That comes in. This is like almost 800, 800 show up here. Notice how they pulled there. See, all this was to give it a kick in the pants. So now, if you're managing this, you would be out there, you could be out there, and if you get a counter rotation and you get a sweep, you could be short here, your stop would be there or there, and now you're looking to take the stops out under here. So what we were doing is we went down to go up, market goes up to go down, market goes down to go up, that's there, then goes up to go down, market goes down, support it to go up, market goes up to go down. Where's the stops? Here. What am I looking for? Not a recommendation. Here, I got to clear these buyers. And this guy pulled. Now, let's try to think why. Why wouldn't this move down? Is it possible? I'm only asking the question. I don't have the answer. All this player wanted to do was skew the book, take out the weak buyers, and then start accumulating on the way down. Now, what I don't know, of course, is this going to hold? So if I take a short, even here, I have to scale where? There. Why? This is where the volume is. This was too low. It operates the same as that and that. vertical integration. Think Matryoshka dolls. I'm trading in, I think of them as fractals, but what they are is really a Matryoshka doll. So when they're inside of each other, the behavior of the participants, the auction, and these are consolidations. All a consolidation is, and you guys know consolidation. Why does it stop going up? Because there's a passive seller. There it is. And why did it go up from here? There's a buyer. There's a delta. Why didn't it go down? Because there's a buyer. All right. And there's the buyer. You see, buyer's there, seller's there. Break, that's a trigger. Now, when it can't get above there, and the sellers that are here now are here, and I break, that's trouble in River City. You could be out, and if you, depending on how you read this, you could use this either right here. The trade is in trouble right here. Once the sellers are below the buyers, and the sellers are there, and the sellers are there, and I don't regain this, I'll see you over. And then when I come back here, and don't forget about this. I get a sweep. What is that? That's also a potential short. Where was my, look at the same concept here. What was here? It's there. So if I sell this or this, I am looking for the last place it was too low, which is right there, and then out the bottom or not, 67% probability. Again, apologies for talking like a, there was a, what was it, Max Headroom or something they had on television many years ago. I feel like I'm running so fast here. I hope you guys can understand. I'm just trying to squeeze a lot of stuff in, okay? My plan on Bookmap, Abdullah, this is the Global Plus, and it has the MBO bundle. And I've got everything in here but the kitchen sink. But go to bookmap.com. The MBO bundle gives me the stops and icebergs. Very nice. The Global Plus allows for execution right, on the screen. Very cool. The Trader Map Lite takes the this out. This stuff. See this? You want to look at that? No. Bracketing algo. Nonsense. Ridiculous. Look how clean it is. These are the kinds of tools, and there's much more. Absorption. These are sweeps. This is all available to you guys. This is the VWAP, by the way. And there's a lot more you can do. I'm a minimalist, so you're not going to see the kitchen sink on here. I have found, and this is just an individual thing, everybody kind of gets their groove on. For me, minimum inputs, because if I have multiple inputs, then I have multiple variables. If I have multiple variables, then I don't, what I have then is random inputs in a random environment. So, and I found out, unfortunately, over many years, that if I'm random and the market's random, there's an old saying from early computer days, garbage in, garbage out, still have winning trades. Every indicator in your software toolbox, higher time frame, there's probably over 100 of them, maybe 200, they all have winning trades. So we go down the merry path of discovery of indicator mixes and time frame mixes. That's a exponential variable on the front end or the inputs. Casinos have anchored inputs. In other words, they just play the games the same way. They don't have variables. Well, my RSI is somewhere between 70 and 90. Well, what does that have to do with anything? Or my oscillator did such and such. Well, what does that have to do with anything? It does work sometimes. Of course. Everything works. How about this? A random buy-sell button works. What does that tell you about randomness? Well, then what if the market is random? Then we need not to be random. We need to know where our trades might show up. We need to learn the behaviors, and we need to develop a plan. You don't need a lot of trades to create a sustainable business. You only need one. Now, right away, you're going to think, I want more than that. You know what that is? FOMO. If you cannot prove concept and become a profitable trader with one trade, I didn't say you take one trade a day. I said one trade that shows up multiple times. Then if you can't prove concept, work out the kinks, build out your discipline, hold yourself accountable, and get into the mental state that is required to operate in a random environment, you won't be in the business. So if your goal is a sustainable business, you have to first of all do a proof of concept. Find out why you don't have sustainability in spite of random winnings. We all have that. And I actually created a term for myself, and I'm doing this 46 years, and that was Trader Groundhog Day. You know, curve fitting, tuning, tweaking, adding, removing, you know, kind of like, just throw everything in the hopper and shake it a few times. Oh, this looks good. Then apply it, and then apply it. What I kept finding was I still had the random winning trades that I always had, and I didn't have an edge, even though I could have winning weeks. So I always thought I just have to make it better. What is that? Trader Groundhog Day. Work hard, wake up in the same place. If that's you, it might be not your intention, but your process. Maybe you're trying to solve for certainty to squeeze risk out, which, by the way, is our primal wiring. That's what we all want. But what happens if you're in an environment where that's not what you need to solve for? Maybe you can't squeeze the risk out. Maybe the way to squeeze risk out is to only trade with edge. Is that a different solution? You see? So the risk exists. The casinos play games with edge. The risk exists. How do you get paid? You got to take risk. So how are we going to avoid it? We got to seek intelligent risk with statistical probabilities. This is the next target. Okay? Now, if we get in here, remember where our support was. And what was the probability of taking the ETH higher low? 97%. Let me ask this astute group of traders. Which side do you think might get taken? I don't know. I'm asking you. You see? So we never got back here. We missed it. It was like, thanks for playing. You get a coupon to the buffet. Okay. Well, then this, or neither, doesn't have to, and this. So my targets are this, and after that, I have no clue. And it's not my job. And maybe even this. Doesn't matter. Doesn't matter to you? Doesn't matter to me. I'm not in the prediction business. I'm in the alignment business. So let's watch this and see how it goes. Do you guys have questions? Max headroom. There you go, James. How we doing in YouTube? And how you guys doing in the Bookmap Discord Trade Lab community? Short, long, sideways, Barca Lounger. What are you up to? Time frame, Abdul, I don't use time. Time is a human creation, if you will, and I don't use time. So for me, it is participant behavior. The question becomes, and look what we have here. Is this the same guy? What do you think? Come on, step out, everybody. What do you think? What does this do? What did it do here? What do you think it might do here? Does that support the short? Question for this astute group of traders. Do you think knowing this is here might be useful? Now let's watch. This is the liquidity marker. This is available to you guys, comes with Global Plus. There's much more that you can add into this. Again, remember, now the fact that this shows up helps me with this. The fact that this shows up helps me with that. This is like, ever get goosed or pinched? You know what I'm talking about, don't you? Well, this is like getting pinched. What does the market do if it gets pinched in a you-know-where? It moves away, right? I know, you never thought you'd hear this in the trading, right? Well, let's be real. This is what's going on here. This is pushing. Now, this is real time. In other words, and then this is historical. So this was here, and now they pulled. So they came in here, gave it a kick in the pants, and now they're done. Are they going to come back in? I don't know. What's the market doing? And what's under here? Sell stops. What are they doing? Pushing the market down. What do we know? This was a long. This was a scale. This is the there's the break. There's the test. This is either an exit. This is an exit. This is a short. This is a structured trade in Trader Lab. You're coming there for the scale. You can see the behavior. And then hasta la vista, 67% probability. And there's more. And what was it? This. Okay? Not a recommendation. Can you learn to do this? Shana, the liquidity are the limit orders. That's the passive. We don't see the market orders or the stops until after they execute. And we see that in the delta. So the delta like this is sellers. What's coming out? Those are aggressors. Well, market orders show up as delta. So sellers sell stops, so I can see that. And I also see a sweep here. So the sweep suggests a counter rotation. It's not a long. Why would I get long here? It's support. It's not a long. And the reason for me, I'm only talking me, I'm not saying anything because it could be a long. I mean, this could be the low of, a test and, whatever, right? But I already failed. And this is here. And this is here. So when I come here and I have the sweep, my teeth will chatter and I'm looking for a counter rotation. But I'm already risk neutral. You see? So I'm okay. I sit here and I'm going, I don't know. Because I know, though, my stops are here and I got a 67% probability there, not a recommendation, and I have over 98% probability to go there. So if I'm sitting short, I'm going for this. And I don't know what it'll do ever. So trade management. And then have humility, accept what the market offers. Don't worry about it. Hindsight's 2020. When you're trading at the hard right edge, no way. It's like, what are we doing? And this is what triggers fear and FOMO, because it's hindsight's clear. Oh, I should have got out here. Really? I don't know. Not me. Where's my resistance? It's now here, not a recommendation. And this is an outside edge. So this now can do this. So if I'm staying in a short, I have to manage it based on my plan. So I'm looking for the gap, and I have a choice. I can micromanage it and get taken out, take what I get, move on to the next trade, or depending on the number of contracts I trade, I could be short to there, scaled, now trade manage 2 or 1. If I trade manage 1, then either it comes all the way across and back here, or it stays under here. So let's watch what it does. Hope it makes sense. There's logic in the randomness, but not predictability. Well, this is where, for me, this is the interesting area. And now I'm going to watch this. You see here what we got here? How this shows you that this was added. Now, this is real time. Anything to the right of this line is happening now. Once it gets to this side, it's historical. So if this changes, I'm going to see it in real time. And then this is now going to move over here. So as this changes, I can see what's happening. This is pressure, another pinch. Where was my support? Where's my break? Where's my potential resistance? Isn't it there? So let's see. Where am I trying to go? 67% probability. And of course, you have to vet everything for yourself. Continuously clueless, but not ignorant. No prediction. Remember, You guys who say, I sell the high and buy the low, come to Trader Lab, clue us in on that. I've never been able to do it, and I can't tell you where the high or low of anything is. In fact, I don't even think about it because I'm not in the business of high and low. I'm in the business of alignment. So all I want to do is get aligned. And if I get out of alignment, I take a stop. Okay. I'm all right with that. Can't avoid it. Can't avoid overhead and cost of production. How do you experience stops, everyone? Do you consider it like, what do you do? If you believe that they, whoever they are out to get you, I'm going to say, no, they're not. What it is, if they're out to get you, you are getting yourself by doing what other retail traders do. Most retail traders do the same behavior. Now, if you understand that, that's typically why retail traders say they pick my stop off. Believe me, nobody's interested in your stop. But if you put your stop with everybody else who does the same thing as you, I'm going to suggest don't expect a different outcome. The market rotates in the stops in all time frames, in fractals. So where's the stops? Well, they're above here, right there, and they're out here. So again, how do you manage your trade? Well, let's just see the behavior and do anything. So we're looking over here, and we're going to look in here. The outside edge is here. Let me kind of show you how this might work. Let me just pull enough data. This is a distribution. We fell out of it. The outside edge is over here. So if I stay in this area, I can then rotate back down to here. If I come through here, then this trade would be over and I'm potentially coming back there. I cannot tell you what it will do. I'm not in that business. I do know this is sitting over here. So we want to see what happens here. And we want to see what happens out in here. So let's watch these high volume area out in here. So this is the area to observe. And these are not trade recommendations. So what do I have going on here? I've got my buy delta. So I got my buyers. And I got my liquidity sitting here. So this is an outside edge. Now, if they pull, they open the hatch. This is another thing about order flow. So this right now is like a lid. And we all know it's there. So do we want to get long to come here? Or do we want to stay on the shorts? Great question, isn't it? I don't have the answer for you. I have the answer for me. I'm not going to tell you because I don't call trades. But I'm going to say, so here's what I'm going to say. 67% probability. And the joy of a statistic is we don't know how, if, or when. So the fact that it has 67, we don't know. We never get there. And 98%-ish probability to get the ETH high or low, and it could do either one. So do I get long or do I stay short? Great question, isn't it? So let's see what happens. I got about 6 minutes left. I want to remind you that there is two things going on here very quickly, and that is take a shot of your trading companion, post it, use the hashtag Bookmap Pets, post it on Instagram, LinkedIn, X, and you can win a free month of Global Plus. Also, tomorrow, right after this stream, there's going to be a special order flow event. You need to use the link in the bottom of YouTube if you want to access it. It's in the Bookmap Discord server. You can also join the Trader Lab community. There's no cost for it, but it is a professional community, so it's not romper room. It's about the business of trading. You can use the link down there. This is going to be exclusively on Zoom, and you'll be able to get the link. Go to bookmap.com, register, use the link in the bottom of YouTube, and go to general announcements, sign up for this thing. And then next week, I'm going to be streaming on Discord only, live like this, but it'll be in the Discord. If you're interested in attending these when they're live, you can also go to bookmap.com, use the link, join the Trader Lab. You won't be abused or solicited, but you do have to confirm your Discord username. Keeps the riffraff out. You understand. Somebody asked me when it comes to the pet thing contest, and it's good for the month of September, and you don't have to do anything. Just hashtag. Again, trying to do too much. Bookmap pets. Somebody asked me, well, is a frog okay? And I kind of thought about that. I said, that's a little rough, but if that's your buddy, why not? So they pulled. This is opening the hatch potentially. So where is the fair price? It's up here. So if you were short, right here, right there is micro high volume structure. Let me draw a little line in this thing for you. So sellers are there, buyers are here, break high, resistance is out here. So now we want to see what happens. Now, if it keeps going, it's coming back here. It's called mean reversion. So for me, if I'm sitting short, I have choices. I can be further away and going for the statistics, or I trade management. And that's subject to the individual trader. There's not a right or wrong in trading, guys. Everybody says, what's the right way to trade? Well, I'm going to say it's what aligns with you psychologically. If you're a trader who gets emotionally distraught watching MFE dissipate, then you're going to design something different that aligns with your psychology. There's traders in Trader Lab, not saying it's good, bad, or indifferent. I have no opinion, that will have a stop way out somewhere and let this thing just float around because they're going for statistics. Then there's other traders that are going to be just trailing behind. This is too high. Absorption was there. Buyers are here. Break low. Microstructure is here. Break low. Resistance. Break low. Sellers are here. Sellers are there. Buyers are here. Because that's where the absorption is. Resistance is here. Break here. You can be out of the trade here, if that's your trade management scheme. If not, then wherever this trade fails, and you have to vet that. The idea of the business of trading is to know your trades and what you will do. This is not a business where you make it up as you go. This is a business where it's all laid out, because we're under the influence of emotions, fight and flight. The lunatic is in charge, right? The only way to control the lunatic, FOMO, fight and flight, bailing out, moving to stop when it's, is to have a plan that's vetted. Then you just kind of sit back and you wait. It's like waiting for a bus. You know what you will do before it happens. We're in an environment we don't know what will happen, when or where. So you already know what you'll do. If I'm sitting here, I know where my next trades are. I also know what I'll do if I get a reversal in my quote time frame. So I might cover this trade. Somebody else might be sitting here in the Barca Lounger and they're not doing anything. What's the right thing to do? I don't have the answer for you. But that's the Trader Lab, and you can get those answers and be in a great community of serious traders. If you're interested, first of all, please leave a like on the way out. And also don't forget to go to access the Trader Lab, go to bookmap.com. If you want to get a free download of the digital version, there's a link in the bottom of YouTube. If you want to register for Trader Lab, you do have to confirm your Discord username so we know you're not a spam-a-later. Keeps the community clean, but it's a serious community. It's about business. This is about creating sustainability. And of course, not everybody can sustain themselves, because, and I believe anybody who comes to Trader Lab can learn how to trade if they do the work. The issue ultimately is going to be your ability to execute your plan and deal with the psychological obstacles we all have to face. That is the real obstacle. Learning the trade is not the obstacle, in my opinion. Please give a like on the way out. Don't forget we have a special event tomorrow. You can register for it. Also, go to the special announcements and Don't forget to submit the photo of you and your pet with your trade station, or your pet actually, who helps you trade, and you can win a free month of Global Plus. Remember, and this is not a recommendation, statistically, we're in this area looking for possibilities. And if you want to review this stream, you can always review it on YouTube. And don't forget, next week, if you're registered in Discord, you're able to watch these streams like this, or you'll see them after the fact. Up to you, but I'd certainly like to meet you in the Trader Lab. And remember, there's the Trader Lab community, a library of webinars, and a document section with structured trades, probabilities, and much more. Take care, everybody. Don't forget to like, and I look forward to seeing you tomorrow.